Fernando asked the question, and anyone can chime in this on what they want as well. What was I doing earlier? BOOM. All right, so I'm just going to go to a profit and loss chart. I'm sorry, I'm going to go to big charts here, and I'm going to change this to a 3-month chart. So I had mentioned on this particular chart, there it is, that I had gotten, for our example earlier, for Oleg, I had gotten in, oh, you can't see that really, about February 22nd when the stock was at 78 something, 78.58, I think it was. Okay. So on February 22nd, that's when we ran the analysis for the position when the stock was at 78.28. So, oh, I'm sorry. This was the lower price one at 68.80. This was, yeah, February 22nd. I'm sorry. So 68.80. We were probably, yeah, the worst price scenario right here. Fernando's question. How reliable is technical analysis? I'm at the point in which I believe only in what adjustments are good for my structure, not considering much technical analysis rules. The only rule I follow is risk control. Well, that's pretty good. I mean, there is nothing wrong with that because it does control the risk. It puts you in a position that where you're still adjusting positions, but keeping it in that fashion where you're making adjustments based on the stock movement and you're comfortable with the adjustment, following the rules in the blueprint that says, okay, well, if the stock falls X and I'm still comfortable with it, if the stock goes up to Y, I'm still comfortable with my adjustment to do that. And you say you prefer to consider fundamental ratios and good quality stocks. For that type of strategy, for risk management and bullish nature, that is good. Why am I highlighting this? Because in this position, going into it here, I'm not saying this was a bad stock. It turned out to be. But right here, this has everything that I wanted. I didn't look at the fundamentals, Fernando. But what am I talking about? Let me clear that drawing out. Let me get a different color for our black chart here. Black, the little black grid we put up here. What's going to look best? All right, we'll do it that way. All right, sorry about that. So pink. So right here, we're close to seeing what Ernie kind of looks for in a Bollinger Band breakout, but it didn't quite manifest. It almost did here too. Didn't quite manifest. That's where it breaks above the upper Bollinger Band and then closes above it the next day. Didn't, and it didn't, but it was close. But again, what do I have here? I have a little conflicting MACD, but now it's turned positive. I'm above the 20-day moving average and looking at Bollinger Band breakouts. You see the little dip here common after that, and then it goes right back up. So technically, as a covered call or as a married put, in the first 10 or 15 days, this stock did what I wanted by technical indicators. And most of my stocks do. But I've got to be ready when they change. Okay? This stock hit here, and it started to look like it was having another positive MACD crossover. I'm sorry, that skewed off right about here. But then when this started and I saw this, I'm out. Or I'm managing, Fernando. As a covered call position, honestly, when I saw that, when it dropped below the 20-day moving average, there was that negative MACD crossover where it couldn't hold and it started to dip down. I'm probably exiting the position, taking the small loss, and moving on to something that's showing me a positive. Are they lagging indicators? Yes. Do I want a combination of both with the trends that I'm looking for? Positive MACD crossover for things such as married puts. I'd like to see a Bollinger Band breakout for something more bullish, such as a long call position. Maybe even a diagonal calendar spread is a good idea, but it's risky with the Bollinger Band breakout because you don't want to sell the call at too low of a strike in your first right cycle where it could get violated. I feel a combination of both gives me the most comfortability, the most confidence in a position. Yes, I want positive earnings per share growth, good PE ratio, good PEG ratio, perhaps, things of that nature, just like you, Fernando. I want a quality stock. Absolutely. I want good volume, trading activity. But when I open a married put, when I open a calendar spread, or even a bull put, I'm looking for certain technicals and fundamentals that match my view. Let's see here. MAS. I think I've been in this for about 40 to 45 days, if I'm not mistaken. And so when I got into this, it was less than that. When I got into this position, it was right about here. I saw the positive MACD crossover I wanted, and I saw the stock going towards and back above its 20-day moving average, and this is what I wanted for that position. Does it always do that? No, but that's what I wanted, and the stock is now trading in the range that I want. I'm holding the 60 put on this position, so I'm near that income method number one. It just hasn't registered yet the rule. Okay, so for income method number one, selling the call, if I do choose to use that income method on the MAS married put for the Fusion subscribers, I want the premium to be at least a third of the maximum risk I'm taking. It's not there yet. It's only at 70 cents. I want it closer to $1. But that's what I kind of look for. Like I said, does it always happen? You get some fake outs. Sometimes you get those reverse signals. Had I entered it here, we started to see the positive MACD at this point, and the stock was going above the 20-day moving average. Sure, for 5 days it went up, but then it kind of came back up. But see here, that's the trouble sign. I'm back below the 20-day moving average, and the MACD went negative. Maybe I've gotten out of that position. That's why I'm trading it with a put. So it doesn't always work that way, but this is what I wanted for the MAS position in that case. That's what I was looking for to enter the position. And of course, again, let's take a look at the other recent one. I'll just open, give me a second here. There we go. All right, so the other position that we had opened, Barry, not performing as I want, which tells you what? Probably tells you that this one is a fake out. That I opened it when it probably had close to the technicals that I wanted. In that case, BERY, Berry Plastics. This was 8 days ago. 2, 3, 4, 5, 6, 7, 8. Yeah, it was riding in that range. It was up at the peak again. This case, it was riding up at the peak. It did have a Bollinger Band breakout 15 days ago, and this is what I typically expect. What Ernie expects, you see a Bollinger Band breakout, you expect an easing, and then you expect it to move up. But this one is consolidating a little, and this is unnerving for me. Okay? So it had, when I got in, the positive MACD crossover, was climbing back above the 20-day moving average, but it only lasted a few days, and the market as a whole took a pullback, and this kind of lowered down. It's not bad. It's down about 2.8% from my purchase price. The put's up a little bit, but I am seeing a negative MACD crossover, and it's flirting with that 20-day moving average. So the bells and whistles for this one are going off. Might use an income method number 12. I still feel it's a quality stock. It's not at the price right now. I'm sorry, Barry was bought at 60.39. It's now at 58.42. Okay, it's down 3%. I'm sorry, it closed down 3.3% from my purchase price. But again, I'm not overly worried right now. And I'm holding the 65 put, but this isn't far enough down for me to consider to make an adjustment to risk control and lower the cost basis or move the put in. It's in the noise for the first 8 days. Yeah, it's down 3.3%, but if it goes up 2% next week, only going to be down 1%. And the Mary put might only be down 0.5%. So the technicals aren't looking good. I'm keeping my eye on it. This might become a 12 very soon. MAS, of course, is up about only 2.3%, but you saw that that's what we were looking for in those cases. I like to use both, Fernando, in that. The comment came in from James. He says, you only use 2 technical indicators. I have. I'm sorry. I don't mean to brush that off, James. I'm sorry. I was just laughing at that because that question comes up a lot. You can make yourself go silly with technical and fundamental analysis paralysis. That's not to say it's bad to do it. You can use stochastics. You can use on-option volume. You can use dozens of other things. There's so many technical indicators you can go out there. For the strategies I use, which are not day trades by any stretch of the imagination, the shortest thing I do is 2-week out bull put spreads. But for the married puts, the diagonal calendar spreads, they're more longer term. And Fernando, that is a good point to bring up. With those kind of positions, these 3 to 4 day shifts in stochastics, MACD, Fibonacci, things of that nature, they don't apply necessarily to your long-term outlook. They're kind of in the noise. But for management, for a short call position that's on a protected position, a bull put credit spread, for example, a shorter term spread, I feel they're essential. And James, absolutely. If you have a set of 7 to 8 technicals that you've mastered close to it, that work really well for the strategies you're using, management techniques that you're using on those strategies, that is fantastic. For my longer term strategies where I've got a longer term leap call, perhaps a married put where my put's out 180 days, I'm using just these 2 or 3 technicals, 4 technicals really, to evaluate, is now I think a good time to adjust and move the put, sell or close the call that I did on that position, or if I opened one of those riskless spread trades in the married put, is it a good idea to bail on that at this time, roll it to another one, or move out of the way if my expectation has changed and I see a more positive indication going forward. So absolutely, I just discussed 3 or 4 technicals, 2 to 3 really. 3 or 4 are probably what I use for evaluations, but they're more for management and yes, getting into the position.